Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Frederick, Managing Director of Trading and Derivatives at the Schwab Center for Financial Research, to discuss the outlook for interest rates. Will we see higher for longer, third quarter earnings, and key themes for the fourth quarter? Randy, it's great to see you as always. Welcome back to Trade Talks.
Hi, Jill. It's great to be back with you.
All right, you got it. And despite the fact that we are starting to get in the thick of earnings season, it seems as if everything comes back to the Fed. And the key question is, higher for longer, and will we ever start to talk about any interest rate cuts at some point?
Yeah, I think we need to define higher for longer, though. I mean, when we hear that, I think people assume that means they're going to continue to hike rates. I think what they really mean is they're going to keep rates at their current levels going longer. And in fact, if you look at things like the world interest rate probabilities or the Fed watch tools or any of those other forecasting tools, you'll find that the probability of another rate hike by the end of this calendar year is only about 50% or less. Historically, going back at least 8 years, for every hike or cut, unless that probability exceeded 65%, no hike occurred. So I think that at the moment anyway, the markets are not pricing in another rate hike this year. It's a little bit higher if you go all the way out to January. You got about a 60% probability, but that also means that there's no cuts in sight for the next 4 months or so.
Do you think their strategy is impacted by what we're seeing with escalated geopolitics and our issues with fiscal control in the U.S. and some of, just the general dysfunction?
Well, I think both of those things, but they're affecting them in the opposite direction. So, for example, there's a lot of concern about the fiscal deficit right now. Typically, when you have deficits this high, it's when the economy is not doing so well. And at the moment, the economy is actually not spectacular, but it's doing okay. But the issue in Israel, it was kind of an odd thing when it happened over the weekend, and then Monday the bond markets were closed. But that actually created what we haven't seen in quite a long time, which was a flight to quality and a fight to safety, which generally means U.S. Treasuries. People have sort of been shunning Treasuries to some extent, which has driven yields higher recently. But all of a sudden, when there's a geopolitical flare-up like we've seen between Hamas and Israel, people actually came in and bought Treasuries, which brought yields down a little bit. But that, like most geopolitical flare-ups, tends to be very short-lived. I don't think it's over yet, certainly, but only a couple of days of that, and now all of a sudden we're seeing yields creep back up once again.
Right, and we've seen that the big banks have reported. I believe 11% of the S&P 500 is reporting this week. Any key themes that you'll be looking for this particular quarter?
Yeah, the financials are always one of the earliest sectors to report. And so far, for those companies that are on a regular calendar, we've had 22 reports, and 21 of them have beaten the expectations for earnings. And that includes 9 banks, all of which beat expectations. So the banks have done extremely well. Yes, they complain a lot about potential changes to regulations that are going to require them to hold more capital, which means that they have less money available to earn income. But at the same time, they're all at record level profits. And while these really high interest rate spreads create problems for them in their portfolio of bonds, because a lot of them have lost value and they have to hold them to maturity. But in the short-term business that they're operating in, they can widen up that spread between what they charge people who borrow and what they pay people who save, and they actually it results in better income for them. So in the short term, they're doing quite well, in fact.
Yeah. And as we look out for the remainder of the fourth quarter, typically a seasonally positive time of the year for the markets, what should we be looking for? I mean, it seems as if it's a little bit unusual of a fourth quarter just because of all the macro dynamics that are impacting the market, the economy, the world in general.
Yeah, it is a little bit unusual, obviously, again, with this sort of game that's been going on with interest rates, and then of course the dysfunction we have in Congress. There's all sorts of things that are causing problems, and then the Israel-Hamas thing just creates another issue there. It's been a pretty good quarter. Again, from an earnings standpoint, it's pretty remarkable. 90% of the companies have beaten the earnings expectation. It's very early. The financials have done very well. When we hear from some of the healthcare, some of the industrials, some of the financial, or some of the staples and companies like that later on, that will likely bring that average down. And that's what we oftentimes see. When we start earnings season, it looks really good. It then moderates. The one interesting anomaly as well is because we've seen inflation come down quite a bit over the last 12 months, is that while earnings are up, revenues are actually down. So they're bringing in less money, but their overall profit margins have improved. So once again, we know, or we're expecting Q2 earnings to be sort of the trough for the year, and it does appear as though that's the case. Q3 is going to look better. And at this point, Q3 is outpacing not only the estimates, but also Q2 by a pretty wide margin. And the expectations for Q4, people don't feel real good, but honestly, the expectations are even better. And when we get, 2.5% GDP, which we're probably going to see, here in a couple of weeks. It's actually looks better than people would have you believe. And certainly they don't feel good, but things are actually better than they feel.
All right, Randy, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.